Talk, Insurance as the Foundation of Resilient Economies. Please welcome to the stage Anita Hawser from The Banker at Financial Times.
Good afternoon and welcome. I'm delighted to be moderating this discussion this afternoon, and I'd like to welcome up on stage my esteemed panelists from the world of international development, governments, and insurance. So please join me in welcoming His Excellency Senator Abubakar Bagudu, Nigeria's Minister of Budget and Economic Planning. Welcome. Dr. Bärbel Kofler, Parliamentary State Secretary at Germany's Federal Ministry for Economic Cooperation and Development. Welcome. Ivana Živković, Assistant Secretary General of the United Nations and Regional Director for Europe and the CIS at UNDP. Welcome. And last but not least, Peter Maurer, a board member of Zurich Insurance. So welcome, everybody. I'm looking forward to what I think is going to be a very interesting discussion, because resiliency is very much a big theme at this event. And insurance is something that I think a lot of us take for granted. We don't even think about it unless something happens to us. But and then we kind of expect that financial security to kick in when we need it the most. But in today's world, arguably, there has never been a greater need for such financial security. Throughout the conference, we've heard about how economies face various successions of shocks, whether it's driven by climate, volatility, or conflict. And I think against that backdrop, insurance is not just a financial instrument, it's a core factor that can drive greater resiliency in economies. And there has never been as much demand on insurance as there is today. And that kind of reminds me of a quote from Winston Churchill more than 70 years ago, where he sort of famously said, "If I had my way, I would write the word insure on the door of every cottage, because I'm convinced that for sacrifices that are inconceivably small, families can be secured against catastrophes that would otherwise smash them up forever." Quite dramatic words there from Winston Churchill, but I think they resonate today given the sort of climate challenges, growing populations, and assets that will need protection. And I think his comments also raise important questions around accessibility and affordability. I see my panelists nodding already. Accessibility and affordability of insurance. So let's get the discussion underway. And His Excellency, I'd like to start with you, because I think Nigeria, I read recently that Nigeria has a very low penetration rate of insurance, maybe 1%. But I'm keen to hear how Nigeria is approaching insurance and risk finance to better protect the country against climate, economic, and other types of shocks.
Thank you very much, and thank you all my fellow panelists and audience. And indeed, resilience presupposes continuity and sustainability and positivity in growth. And disaggregating the challenges, particularly risk, and finding a way to meet the financing needs, even in the existence of those risks, is critical to building resilience. And Nigeria, we have this experience. The insurance, as widely defined, is low, but it's not typical. It's not unlikely when a lot of the economic activities that are that are predominant are the kind of economic activity that the formal insurance sector would not want invest in. For example, you have millions of hardworking farmers or those in livestock or those in fisheries and small scale, which typically the models, insurance models that are available do not naturally lend themselves to support, even though they have been tried elsewhere. And therefore, what we have done, for example, in Nigeria, is for the government to step up and provide some of that insurance. So we have a national, for example, we have an agricultural insurance scheme to protect farmers from flood, from climate-related issues, but that's insufficient. To protect farmers from getting into poverty, you need yield insurance, you need, even for the evolving climate shocks, you need more than is being currently offered. And as always, the government is not the best provider. We want to motivate the private sector to come, and it's the same with most of the artisanal or family-based economic activity. The budget system is being used to support some of that risk, especially by predictability. We typically spend a lot of money in predicting what the flood will be like in the next rainy season and provide funding in anticipatory spending to ensure. But that's one level of insurance. On the other level is insurance to underwrite economic activity, because the resilience requires financing beyond what is locally available. And the short-term nature of financing that is typically available to a country like Nigeria cannot accommodate the support for resilience without an insurance provider in the middle. That insurance provider can be government. Nigeria recently relied on an Islamic Development Bank credit guarantee, a form of insurance, in order to raise about $2 billion to support superhighway construction. Again, we have related to that health insurance, which, even though we may not obviously link it to economic resilience, but human capital development, again, is important for. So the limitations of insurance is limiting the availability of financing that is otherwise needed to support resilience. So where we need 20-year money, 30-year money to do insurance, to do port, to do green energy, we appreciate that we have to mobilize insurance programs that can help crowd in the financing.
Yeah, so it's playing an important role in your economic development, and no doubt sort of addressing this issue that a lot of low-income and sort of middle-income countries face around growing indebtedness. I'm assuming that, you're not having to become more indebted in order to protect your citizens. Yeah. So let's move on. Dr. Kofler, I know BMZ is supporting both development and finance institutions and insurance companies to kind of try and use insurance in innovative ways to manage and reduce risk in a lot of these countries. Can you provide some more details on the kind of work that you're doing?
Well, thank you very much. I very much appreciate the topic we are discussing, because at the end of the day, we have to explain why insurance is so important also in a development context. And that gives me a little bit that possibility and that chance to do so. I would say we are acting in three levels, or on three levels. The first level is that we look on global public-private partnerships and global initiatives. A few years ago, before my time in the ministry, there was already an idea coming up with insurer resilience. What can we do to really go into creating more resilience for farmers, for example, who are exposed to extreme weather events and things like that, so they don't lose their home, they don't have to sell their livestock or whatever if an extreme weather event is coming up. That was growing and growing, that idea, and it was especially also quite interested in cooperation with the most vulnerable countries, and is now part of the global shield against climate risks. And I think that is a really, really excellent idea, because you can work on various levels. You can work on prevention, which is extremely important, and you can work on supporting those who were suffering from climate change, extreme weather events, and so on. And it's a South-North, North-South cooperation. And I think that is something which I really want to underline, that's of utmost importance. I've been, for example, in an insurance company in Ghana, who were insuring farmers in the north of Ghana, but it was more than an insurance, because it was also advice on prevention. What can you do, and when do we bring out the seeds, when to harvest, combine it with weather information, and when the prices are good for the harvest at the end of the day. So you can combine it with a lot of things which really helps those who are working on the ground. So that's the one thing, is this global public-private partnership, global initiatives. We are working on regional initiatives. I want to mention simply two. Mekong River, for example, which is is of tremendous importance in the region. And it's also showing that we are not working inside silos and countries, but understanding that those effects of extreme weather or climate change alongside ecosystems is crossing borders. So that's something which is important. We're working, for example, because you were, of course, mentioning Western Africa, and you mentioned the Islamic Bank. We're also working with the Western African Development Bank and other institutes, Frankfurt School of Finance, African Risk Capacity Limited, and so on, Munich Re, to work on shock-resilient loans for that area, which is also quite important, because you have to do something after the event happened. How can people recover? So that is also really important. And the last thing I want to mention is we are contributing also to mobilizing the private sector. Talking about the Natural Disaster Fund, for example, where we, with other partner countries, investing. And we're also insurance, in that case, Hannover Re is inside. There was a panel today on scaled, how to include private sector in that whole debate. That's something we are pushing. So that's three examples in cooperation we are really working on. And of course, it's international governance. We are also having to invest with partner countries in forecast, prediction, prevention measures, adaptation measures where it's not possible to prevent something, and then the recovery. So that's the whole spectrum we are engaged in, and we can't do it alone. That's why I'm so happy that we have so many partners here, also on that panel.
And just briefly, why is insurance so important? How does it change the development conversation?
Well, quite practically, if you were planting something, you're investing your whole money you've got as a farmer in that seeds and in that harvest. And then an extreme weather event is coming and is destroying your complete harvest. what are you supposed to do? You don't have the money, you don't have the possibility to do it a second round and to invest again and again. So we need financial tools, insurances, who are giving the farmers then the chance to reinvest, to restart, to recover from what was happening. And therefore, insurance can play a big role. It's not about supporting private companies, insurance companies. That's a private business, but we want to think things from the point of view of those who need this coverage. And that's the important thing.
Thank you so much. Ivana, let's look, because I know UNDP is doing a lot of work in this area. What are you doing to advance or expand sort of risk financing and insurance in the developed countries that you work in?
Thank you. First, thanks for having us in this panel. It's great to be in Hamburg overall. But on your question, we see that countries are increasingly... Is this too loud?
No.
Countries because increasingly viewing risk financing as an investment in economic stability and also resilience, and not only as disaster relief. Insurance helps governments manage fiscal risk, protect development investments, and create conditions for private capital to flow. And as we know, what is not insurable, it's increasingly also not investable. So the most important enabling condition, as we see it in working in many countries, is government ownership. Insurance will only scale when it becomes part of the country's development, fiscal and resilient agenda. And to embed this risk within many different national systems and policies we see it very beneficial. So it needs to be integrated into disaster risk financing strategies, but also into fiscal frameworks, nationally determined contributions, integrated national financing frameworks, and other kind of systems that we work on. Otherwise, in silos, it's a one-off and not really very efficient. So we have many examples. For example, in Ecuador, we supported the government to pass the country's first parametric agricultural insurance regulation, which then enabled the launch of the first parametric agricultural product this year.
Can you explain what parametric, because I don't know what parametric insurance is, but maybe just briefly explain.
It is monitoring the expected weather and other possible risk. For example, they will count in the possibility of flood, of what is it called, the drought, and other disastrous events that can affect the insurers and also the clients. So we also have worked with many countries to translate resilience to scale. For example, in Colombia, successful payouts following climate shocks have led government to increase the investment in agricultural insurance. In Nigeria, more than 4 million people in Lagos State are already covered against flooding. And together with the federal government, we're exploring opportunities to scale this coverage to more states. And through, of course, the national risk financing mechanism. So here, strong public-private partnerships are essential, and we have a partnership with Insurance Development Forum, as you see, supported by BMZ, and Insure Resilience Solutions Fund, which combines the global insurance expertise and risk capacity with country-level implementation. Together, we can go beyond launching standalone products, but rather to build a country-owned systems that can scale sustainably.
And how much demand are you seeing for these kind of insurance products? Is this a relatively new area for UNDP?
I think we work in about 30 to 40 countries on this portfolio, and it is growing. But of course, there are preconditions to be met, and we are developing it, but I think we can reach more countries as we work in 170 countries. So this is there is still space to grow.
And what are some of those preconditions, just briefly?
Preconditions is the willingness of the government and the public actors that need to that want to work on this. And I think the willingness is the less of a problem, and then there is financing. And hereby, I think bringing in the large IFIs and multilateral development banks perhaps could be part of the solution, as the State Secretary mentioned.
Thank you so much. And Peter, finally moving on to the insurance sector, we've been talking a lot about insurance, and now we're going to go straight to somebody who has first-hand knowledge of this sector. And we've heard a lot at this conference that development financing is in trouble. So I wonder how insurance and risk financing mechanisms can sort of help economies function and grow when there is so much uncertainty.
Well, I would start by saying that it is a relatively new branch of the development discussions, because for decades at the conference like this, we would have discussed banks and recipient countries and donor countries, and we wouldn't even have mentioned insurance. And I think to pick up what Abubakar mentioned in his intervention, there is a logic that investment only come when investment activities are insured. And in order to crowd in investment, which is one of the important issues here, you need to have insurance. So insurance contributes to investment, investment contributes to economic development and strengthening resilience. And if you want to pick on what insurance do best, I mean, I haven't done insurance all my life. I have done other things, but when I came to insurance industry, I was impressed how much this industry is a data crunching machine. And what insurance companies do is basically put a figure on the risk and measure risk so that they can be integrated into balance sheets of economic activities and companies. So the pure methodology of an insurance company is important in order to help resilience and economic development.
And nobody was putting a number on those risks in a lot of these economies.
In a lot of these economies, because these were risks which were uninsured and basically where people were affected and could only be helped by solidarity of communities on the ground. So insurance methodology is an important point, and it's not the Insurance Development Forum by chance that modeling risk and calculating risk is an important element of this activity. A second element I wanted to know, which goes again to the data crunching of insurance companies, is that because of the longevity of dealing with crises, risks, and shocks, you also get to know how to prevent crises, risks, and shocks. And one of the most important issues and shifts, I think, in the insurance sector over the last 10 years is that most of the insurance companies started to focus much more and to move from only selling insurance for after-event disasters into advising companies and private families and communities on what to do to prevent floodings, how to construct to make cities cooler. For instance, how to, as Bärbel has mentioned, how to cultivate so that you can have economic earnings. And so insurance companies, through their activities, come with an enormous amount of knowledge. And that's the basics and the essence of the Insurance Development Forum is really translating knowledge from the insurance sector into developing contexts. And I think the prevention element is really critically important. And maybe...
How does that work in practice? Because I know when we were speaking beforehand, you mentioned satellite data and how insurers are using that to sort of like trigger payouts.
Well, it was mentioned before. Parametric insurance is probably the most developed product in developing contexts. And parametric insurance offers payout against indicators which are basic data baselines coming from objective scientific observation. It's rainfall patterns witnessed by satellites which lead the next day to have payouts of insurance because you don't guess whether there was a flood. You have a threshold and you see that floods have happened. And so instead of waiting 4 months and struggling how your payout happens, you get them against objective criteria and data. And I think that's the popularity of parametric insurance. You can have other methodologies. I mean, countries, together with international institutions, have created sovereign insurance pools and funds which would allow, according to context and countries, payouts which are facilitated and respond to this development. And I think it's important that because of the disruptions that we have seen, in particular through climate change and other disasters, these insurance products become eminently important. Because if we don't have them available, it is really complicated to come to the aid and sort of absorb shocks and at the same time contribute to development.
Can insurers underwrite every risk, though? Because we're hearing, obviously, in developed markets, issues with insurance for, say, properties in California, for example, that are at risk of wildfire. So in a development context, are there similar challenges?
Well, there are challenges, as you mentioned, in developed contexts. In developing contexts, we have to acknowledge that private insurance is very much also a luxury product. You buy private insurance when you have wealth, when you have something to protect. And therefore, the penetration that you were alluding to at the beginning, and I would agree with Abubakar, it's explicable why Nigeria has a 1% penetration of private insurance, because people can't necessarily afford because they have other priorities. But it doesn't mean that risk does not affect them. They are affected by risks, and so we will be forced, most likely, with the frequency and intensity of disasters increasing, to have new forms of cooperations between the private sector, the public sector, international cooperation in order to absorb shocks. And that's where we stand at the present moment.
So we just have under 20 minutes left, and I sort of wanted to give everybody a chance to sort of address this question and to leave the audience with some hope, because I think sometimes these topics can be a bit depressing. What kind of concrete actions are needed to ensure risk financing mechanisms support resilience before an event happens rather than after a crisis? And His Excellency, I'd like to start with you again. What concrete actions would you like to see?
Well, thank you. I think it has been said earlier that insurance is the theme of this discussion, demonstrate an evolution in the right direction, that development partners, insurance companies, and those who want to do better with development are beginning to talk about the role of insurance in this, because it can definitely provide the catalytic means to maintain momentum when it comes to resilience. So this is part of what I would like to see is what I'm seeing today. The conversation have started, but more for institutions such as UNDP or institutions with convening authority, with development cooperation, to encourage conversation where private insurance companies across the world who have wealth, who have massive capital, can understand the risk better and to even appreciate, because for us in the developing country, dealing with maybe a non-native local insurance, even with reinsurance, is maybe like dealing with a credit rating agency. Sometimes there are methodology issues that you don't understand. The insurance methodologies may be there. We know that there is this need, we see these hardworking men and women who are moving around with animals in a farmland as early as 4 a.m. or in a fishing ground, or willing to do so, but who, because of limited capacity maybe on the government to provide all the insurance, will maybe are going to end up being more poor than they are currently is. And insurance can step in, private insurance. For many countries, the small and medium enterprise sector is a driver and key engine of growth. So availability of insurance and insurance product on a pricing and a longer term basis can also support inclusion and resilience. Last but not the least, yes, we appreciate that as countries get supported, the importance of insurance as a support package, so for that countries can allocate more resources themselves, mobilize their domestic insurance sector, as well as communicate better the opportunities to insurers outside the shores of their countries can help. Thank you.
So there's some education to be done there on the part of the insurers to better explain and perhaps understand the kind of risks in your markets, rather than looking at through a very Western, perhaps, lens. Sort of, Ivana, let's move on to you. I mean, you're obviously at the sort of coal face of all of this, for want of a better word. Can you explain what concrete steps you're taking to sort of move this on to something that's more preventative rather than after the event?
As I mentioned, we work with 34 countries already, and maybe a good example today is the initiative that has just been launched. It is about including insurance into social protection systems through cash handouts. And through that way, we work with the systems that we know. We have the proven approaches and we know what works, but we need to integrate these solutions into national systems before the disasters occur. So we think this is the right way forward, and knowing that insurance premiums are probably going to they're going to grow by even 50% by 2030 for disaster protection, which will leave a large part of the world uninsurable, and also put a strain on national budgets should these disasters occur. So as we have tried these different approaches, we feel that we know what works. We just need to implement it together as a group, as we already are starting these conversations, and they have been going on for quite a while. But all stakeholders play their part. It's not about an international organization, it's not about a government, it's about a multi-stakeholder approach for tackling this issue, and also having its, on sustainable development will be dependent on on these parameters, among others, because the losses that we see every year through these disasters are higher and higher, measured in billions. And in the countries that already have a very high debt burden, it's very difficult to tackle these alone. And with ODA declining, this is also not a favorable development. So we need to find better solutions, and we're trying to implement them on a small scale.
Thank you. Dr. Kofler, what would you like to see as concrete next steps? Is there anything missing that you think perhaps needs to be addressed?
There's surely something missing, but I'm not thinking about, No, what I wanted to add is I think we have to be clear that there are different levels we are discussing. There's a conceptual on the technical level where insurance companies have a lot of expertise on their own, and which can be used on a political level. We have a financial level where is the money coming from private sector and public sector? How do we blend it? How do we merge it? And there's a political dimension. So I think for governments, it's important to really make their public aware that it is good spend money if you spend money in before something is happening, in pre-arranged engagement somehow. Because at the end of the day, we were discussing that, and I know Peter for quite a long time, so we were discussing that 10 years ago when we were talking about forecast-based financing, for example, to finance as a government something which hopefully doesn't happen, but it's not happening or not so extremely happening because you're financing something. That's the whole thing about prevention, and we all know there's no glory in, especially not in politics. But we have to make clear that we need to strengthen the efforts in preventing things, in prevention. And if that's not possible because climate change is there, extreme weather events are there, using the science to adapt as much as possible and use money for adoption. So there are two discussions, political discussions. That's the money in discussion on adaptation, basically. And then what do we do with the insurance or the money paid into the insurance as a money out then to those to overcome the shocks which really took place? I think we have to discuss both dimensions and make that clear. And we have, as governments, I think we have a duty to also think about this first dimension, not the mere insurance, what the insurance company is doing, but using the data. You were saying insurances are data machines. That's true if you look on all the insurance Munich Re is the big one in Germany. So they are really having data on climate, on weather, and on other extreme catastrophes or whatever predictions, which should be used also in politics with using money in to prevent whatever is happening or could happen as a result of the catastrophe.
Why do you think it's taken so long to get the insurance sector involved? If this data was there, this expertise, why? Because often when we hear about climate adaptation finance, it's all countries want concessional finance, but the argument at every COP is it's not enough that developed countries are offering. So can insurance change that conversation?
Well, I don't believe that one size fits all. So insurance cannot solve all the problems on the table. Countries are different. Weather situations or natural disaster situations are different. It's a way for governments as well as for the private sector to see where really some overlapping interests are laying. So that is also something which has to develop. It's about trust building at the end of the day. So there are a lot of things about it. So you never find only that button you press and then everything's fine.
Thank you so much. And Peter, we always come to you last, but not least. Final thoughts in terms of next concrete steps for the insurance sector that builds on this preventative sort of theme that we've heard throughout the discussion?
Well, I would agree that a lot of tools and instruments and, and platforms are here to deploy knowledge about insurance in developing contexts. But I would also very much emphasize what Bärbel mentioned in her intervention, that translation is not a mechanical task. Translation is a political process. Because in order to land those tools and instruments, you need laws, you need political decisions, you need frameworks, and to emphasize, you need changing behavior if you want to really do prevention of disasters. You can always deploy insurance for after disasters, but taking knowledge out of past processes, for instance, to construct in different places, to construct differently, to behave differently, is a changing process of the economy. So we just have to be aware there is really no button to push. And there is ripeness of markets, and here the insurance discussion touches the development finance discussion overall, and this needs, again, a political process and support in a political process. The Insurance Development Forum does a lot in structuring this debate, in making knowledge available, in going to country, in helping translate global knowledge into country-specific recommendations, but thinking that this is just a mechanical translation like Google Translate, it's not happening that way. It's a much more sophisticated political process. It belongs to the overall discussions that we have here on how climate change, development, risks and disaster are treated today, and I think that's where the insurance sector can substantively contribute.
And you think that insurance can kind of try and encourage this preventative behavior in communities, which perhaps hasn't been so much part of the conversation. It's more addressing stuff after the fact. I also, just briefly, we've got 3 minutes. Will AI change this in any way? There was a panel on AI earlier. I know it's probably a bit of there are two sides to AI. It's either good or bad. But in this context, do you see AI being able to, provide another level of transformation, particularly for development?
I mean, it depends a little bit what your understanding of AI. AI is great to model. And AI is great if you look at it as a help for political decisions. But if you try to replace thinking by data, you will end up at the wrong place. And I think it is important to acknowledge today that it is the use of AI in a specific way and in a specific context, which will hopefully help us have more sophisticated models and have clearer decision-making processes. But you can't substitute political decision-making processes, and you can't substitute human intelligence by just putting tons of data into the discussion. And so the question how we articulate and use products of artificial intelligence in order to become more sophisticated in our risk approach, in calculating risk, is still a big issue. I mean, insurance companies struggle as we speak to integrate in their traditional model artificial intelligence and how we work on it. And this is definitely an issue to pick up next year as well. Huh?
Thank you so much. Join me in thanking our panelists.
Thank you.